Good morning, it's Tuesday the 28th of April and it's 7:30 a.m. I'm currently heading into the office as we typically are at this time. Now, I'm probably looking a lot tidier, a lot less scruffy than last time you saw me. I think I'm picking up the Barbary skills pretty well. Certainly, if I lose my touch with trading, I think I found my new passion. But until that happens, you are stuck with me. Now, we didn't actually take anything yesterday since it's Monday. I took a trade on cable, which I then subsequently closed. Just in a small amount of profit. Didn't really like the movement on it, and of course it's Monday as well. So if I get in a position on Monday and I'm not feeling it, I'll just close out and wait for the London today. In terms of the markets, the DAX and the S&P are looking all right this week, but predominantly my focus is on pound yen and cable, trying to catch that move that we were looking to catch for most of last week. Now, last week was actually a very, very corrective week in the markets, and something that not a lot of newer traders seem to realise is the market does go through phases, right? You have impulsive weeks, you have impulsive months, you have impulsive, quarters, and then you have corrective days, weeks, months, quarters as well. So there are times in the markets where trading a particular way doesn't tend to work so well, right? So we're going to get into the office just shortly. We're going to get onto the charts and we're going to see what's brewing in the markets for the day ahead, and then I'll update you when we get there. Gold again is obviously still respecting that double top, pulling back into that 1680 handle, but until it gets down into that 1680 handle, there's very little to be said about it. I do still think 1800 is an achievable target. To the short side, I know a few of you are looking at shorts. To the short side, a break of 1680, I would take a trade down into 1630, right? So good 500 pips there from 1680 to 1630. Nice 500 pip move if we can get below that and retest it, right? I'd be happy to do that. Of course, we need fib confluence, but we've got that 8 hour handle, right? We've got that 8 hour 1680 handle. In terms of upside, I'm not seeing massive amounts of opportunity to get involved to the upside. A few of you have sort of trend lines drawn in here. You're looking at this to be a potential third touch. You've also got, some structure drawn out in here, and price is also, sitting on a fib. So we've got the fib from the low to the high. We've had that 50% rejection that we know gold likes. Gold likes 50% on the fib. We've got the structure, we've got the trend line, we've got the EMA. The trade makes sense, right? The trade does make sense. But what do we have directly above it, kind of casting shade over it? We've got that double top just sitting directly over price. For me, when you see that this type of thing towards a trend line, it often shows failure. Now, some of you may not know this, right? Because I didn't for the longest time when I started out. I didn't, never even thought about it. When you see something like this, right? Price consistently making higher highs and higher lows, right? Like this, on a trend line. When you see this, that is the first sign that there could be a shift in momentum, right? Because you've went from a low to a high, higher low, higher high, higher low, higher high, higher low, higher, not higher, lower high, right? What happens after that? Lower low. What happens after that? Lower high. What happens after that? Lower low, lower high. And all of a sudden, the trend has just changed. And the point at which we saw it was going to change was this significant lower high. So first proper trade of the week for me is a short on cable. Now I've entered off of this 15-minute bearish engulfing from this daily 40 period moving average. So this is a daily chart. We've had a 61.8 tap and we're rejecting that daily 40 period moving average. We've also got some structure over here to the left that price is sort of being capped by as well. So I've taken this on a 0.5% risk entry, and I'm looking just to ride it down to just above that 0%, so I'll keep you updated on this position as we go throughout the day. Now we've actually signed the contract for the new office, which means we are currently in the works of starting to get things set up just the way we want them. Now, to get to the new office from our current office, we literally walk out into the hall. This is obviously level 2. We walk downstairs to level 1, and the office is pretty much directly under where we currently are. So we're down onto level 1 now. And then we're through this door. And then hopefully the lights turn on. And then this is our new office in here, right? So we're currently in the process of getting proposals sent through to the contractors to get our logo up on that wall. I'll show you what that looks like now. And then we've got a few things to do in here. We're actually going to be removing these tables and putting couches here, and then myself and Callum will work there. We'll have a desk for clients when we do one-to-ones, and then we're going to have a projector on this wall for when we're going over course material with clients. So today's pretty much being spent going backwards and forwards with the contractors, trying to work out pricing for getting our logo on the wall. The logo is going to be a lot bigger this time, and therefore it's going to cost a lot more than it did last time. But again, these are the kind of costs of business. I think the logo is probably going to cost around about £500-600 just to get that fitted, and for the contractor to come out, a couple hours of his time as well. So obviously with the lockdown restrictions in the UK at the minute as well, it's not going to be possible to get that done anytime soon. Okay, so I have actually just closed that cable short for just shy of £600. My risk was about £300 on this anyway. Now, the reason for closing early, as well as being very busy at the moment and not really having time to watch the charts, the DXY has pulled back into some prior structure and looks like it could be ready to roll over, right? And obviously, a weak dollar means generally that we're going to see cable push up just a little bit over the afternoon. It's not something I'm really looking to hold through. This is our desired conservative entry on cable into the day tomorrow. If we can get a break of this counter trend line, the 40 period moving average, and this prior recent significant low, and then a retest, we'd be happy to take shorts from there, obviously with a fib confluence, ride it to the downside for a little bit of a more conservative, higher probability entry there. But closing out with just shy of 0.6% on a 0.3% risk trade, so we're up still 1 to 2. More than happy with that for the day. So I'm actually getting ready to head home for the day. I'm not in any setups and I'm not looking at any either. And I've done all my journaling, I've done all my work with clients, so I'm gonna head home and I'll catch up with you when we're heading in tomorrow. Hopefully we can have a bit more of an exciting day on the charts. Good morning. It's Wednesday the 29th of April and it's just gone 7:30. Now, something I wanted to talk about before I jumped into the office this morning is the fact that the markets aren't always going to be conducive for your system or strategy. Everybody trades a different system, everybody trades a different strategy. Whether, it falls into the mean reversion category, meaning that you're trying to, sell over extended markets to the upside, potentially using RSI, MACD, etc. Or, maybe you're trying to buy, oversold markets, again, looking for oversold market conditions extended to the downside. Or maybe your system is a trend following strategy similar to ours. We're looking at the higher time frames to work out our overall directional bias, and then we're scaling down into lower time frames to look for entries with multiple confluences to get involved in the direction of the trend. Now, because our strategy is very particular, there are weeks and even days where, days and even weeks where our strategy isn't particularly conducive for the instruments that we're trying to trade. Now, as a beginner trader or as a new trader, in weeks where your instruments aren't looking too good for your system, what beginners tend to do is they either start looking at new pairs, new instruments, or they start trying to look at new strategies. Now, that isn't a particularly bad idea. However, 9 times out of 10, they haven't already mastered the pairs or the strategy that they're already trying to trade, and they're now moving on to something else just because the market conditions have shifted. And what this can lead to is a very scattered approach where you know many strategies and you know how to trade many pairs, but not in depth. You don't know how to trade it properly. You just have a very shallow knowledge of multiple strategies and not to the point where you can be consistent in one or the other. Now, as a beginner, you'll find, days in a row, potentially weeks in a row, where you're having consistent wins. And then you'll find, that's followed up by a few days or a few weeks where you just totally eradicate all of your wins with a string of losses. And that's because you've not sensed that change in market conditions, or maybe you have and you're just trying to force those trades out. Now, I get that can be difficult to not trade, especially when you have a lot of outside influence. You have maybe Instagram, Twitter, Facebook, YouTube, and you see people catching these amazing entries on pairs that you don't trade, using systems that you don't trade and making loads of profit. And you're tempted to, it's been a quiet week for you, you're tempted to just try and do what they're doing. You think, if this person is making loads of money in EuroCAD, even though I trade, pound yen and euro dollar, I'm going to start trading EuroCAD. And I'm going to start trying to, sell that. I'm going to start trying to do that intraday strategy that I've never heard of, and you end up, just to try and chase the markets, you end up losing money, and I can have weeks, I can have months where I'm very active in the markets, where I'm looking at setups every single day, and then I can have, days and weeks where I see nothing. I think these market conditions don't look too good, we're potentially in some consolidation, the instruments that I'm trying to trade, they're potentially getting ready to reverse. I'm just going to have to wait for this to play out. So what could you be doing in that time? Well, you need to make the best use of your time. You want to trade, so why don't you backtest, right? In particularly active weeks or days, I don't have the time to backtest or develop out my edge, right? Or even develop a new edge. So when you have quiet days and weeks, that's the time where you can be gathering data. You can be building out a spreadsheet and you can be really refining your edge, working out, what market conditions does it work in, what market conditions does it not work in. You could even be testing new instruments, whether you want to get into trading indices, commodities, if you want to look at different FX pairs, that is your time to do that. And as you try to, as you move over into the more professional side of things, that's what you need to be doing. You need to be very aware of the market conditions and whether they're conducive to your strategy or not, and you need to be able to pick that up very quickly. Now for me, last week I got a little indication that the markets might not be in particular conditions that are good for what I'm trying to do when I lost that trade on the DAX. I've come in this week, the markets are looking good, but I'm just not seeing the opportunities, and for that reason I'm taking a bit more of a hands-off approach. This week and this month I've been insanely motivated, right, in the perfect mindset for trading, However, the markets just haven't been doing, they've just not been as conducive for my system. Now, I'm still up 5% for the month. That's not huge, but it's still good, right? But I'm going to be using, I'm using this energy, this motivation to produce content, to do one-to-ones with clients, and to work on backtesting. And it really is as simple as that. Be aware of the market conditions, and as you start to pick up these signs, that is when you can very quickly withdraw. Beginners, they don't pick up these signs that the market conditions aren't conducive quick enough, and what they do is they give away too much. They give back too much of what they've made in the good weeks. So if you have, a good week or a couple of good weeks, and you sense a shift in the market conditions, hands off, right? It's as simple as that. It's just as simple as, feeling that something's changed and just taking your hands off the controls for a little while, right? Until you start to feel it come back. And you need to be comfortable with that, being patient, There's a difference between being patient and being hesitant. Hesitant is fear-driven. Patience is confidence-driven. You are patient because you know what you're waiting for. You know it's going to come around. Hesitation is unknown, right? You're unknown, you're scared, and you take your hands off because you're scared. Patience, you know what you're waiting for. You're just taking your hands off until it comes around. So I'm going to finish this coffee and I'm going to head into the office, get onto the charts and see what things are looking like for the day ahead, and then I'll catch up with you when we're doing that. So live call with members is now done. That Zoom call is just recording at the minute for upload. Today, all we're looking for really is a potential breakout of this head and shoulders and a retest of the neckline on Eurodollar. So something like this to ride it up to this overall structure high. Or potentially a break of that recent significant low to the downside like that, riding it down to this structure here. And then on cable, again, we're still looking for that slightly more conservative approach to the trade that we took yesterday, which is just a break of structure and a retest to the downside. And then pound yen, we actually missed this trade whilst asleep. It's set up whilst we were asleep, a break and retest that counter trend line. So all we're looking for is a break of that recent significant low and a retest to the downside. So this was all covered in our live call with members just then, and I'll update you if we do manage to get involved in any of these trades over the course of today. So I finished that live call with the members and I'm still watching cable, pound yen and Eurodollar. I've got a couple of clients from New Zealand and Australia to catch up with. They're usually winding down for the evening at this time, so it's really the best time to have a chat with them. I've got some emails to do as well, and I'm going to be eating this My Protein double chocolate protein cookie. I have like a major sweet tooth, and obviously it's not good to be eating chocolate and stuff like that. So I eat a lot of like protein cookies, bars, brownies and stuff like that. If I'm going to be sort of satisfying my sweet tooth, it may as well be something that's good for me as well. So I'm going to get on with this, I'm going to eat that, and then I'll catch up with you in a bit when we're doing something a bit more interesting and entertaining. So lazy lunch today, like a tuna pasta salad. I actually thought that this was just pasta when I picked it up in the shop. I didn't realise it was a salad. I don't typically go for salads because I feel like you eat it and then like 10 minutes later you're just hungry all over again. Absolutely pointless. Wait, it's just like eating air. But after this I'm going to get onto the charts and give you a breakdown of a cable trade that I was in on Monday that I actually closed out of. I put on my Instagram story that I was expecting a stitch up. I was short from a level with stops in a very obvious place, and I put it on my Instagram story, and a lot of people who are following me had messaged me to say they were in the same trade. And for me that's typically a bad sign. It's typically a bad sign if a trade's that obvious, because usually the less obvious trades, the ones that feel a bit more uncomfortable, tend to be the ones that actually pay dividends, right? So I'm going to get into breaking that trade down, a little bit of the psychology and a little bit of the intuition behind why I expected that stitch up, why I expected a sweep of stops before the move actually took place. So I'm going to eat this and then I'll catch up with you when we're at the charts. We're going to take a look at that cable trade that I was in earlier in the week, the one that I put up on my Instagram story, and I'm going to explain a little bit about what I meant when I said I was expecting a stitch up, how it played out, how I kind of anticipated that, and then how I actually traded it. Now, another question that I got from quite a lot of people was, why do you call pound against the dollar cable? Now, cable is a nickname given to pound against the dollar by people in the industry, and it's simply the nickname simply came from the transatlantic cable that ran between the New York and the London Stock Exchange to get the quotes very quickly between those two exchanges. Therefore, the exchange rate of pound against the dollar simply became known as cable, right? So we're going to get over onto the charts now and take a bit of a more in-depth breakdown at what I meant when I was expecting that stitch up, right? Now to my left we have this chart of cable. The first thing I noticed was this descending trend line coming along the top, right? And we were coming in for the third touch. So we had touch 1, touch 2, touch 3. The third touch on a trend line is typically known as the highest probability of a bounce. This is very, very basic stuff, but it's typically the third touch is known as the highest probability of a bounce. Scaling in and looking at this on a little bit of a tighter perspective, we also have some structure in here to the left in the form of this support level, which as we know flips to resistance. And we also had a fib from this high to this low here. Now, a lot of people ask, how do you know where to draw your fibs from? Something that I use quite often is a line tool, and I'll mark out what I believe to be the RSH, which stands for recent significant high, or on the downside, that would be an RSL, which stands for recent significant low. Now, why significant? Why are we using that word? Because we have highs all along here, right? We've got tops, we've got bottoms, we've got lows here, lows, highs, but none of them are significant, right? These are the significant high and significant low. And what makes them significant is the top and bottom of this bearish impulsive move. Yes, we have some structure within that, but the top and bottom of that move are what is known as the significant high and the significant low. Now, after drawing that fib, we find that the 50% lines up nicely with that structure, as well as the trend line. So we have three confluences, right, to take shorts from here. We have the 50%, we've got structure, and we've got that trend line. That's enough confluences to take this trade, albeit it was a Monday, so I was in on a very small percentage risk. Now, we then saw spinning tops on the 4 hour, which is, a confirmation of a downside move. So I got short here with stops just above that 61.8. I'm going to take profit just down there at that minus 27 on the fib. Now, the negative 27 was also being confluenced by some structure to the left. However, that was my downside target initially. Now, as we got to around here, I put a screenshot on my Instagram, which I'll show you now. And a lot of people messaged me and said that they were also looking at the same trade. Now, ordinarily, that's quite a bad sign. The trades that feel most comfortable and the trades that most people are looking at are very, very obvious, and it makes you sort of cannon fodder for the market drivers and for, whether you want to call it manipulation or whatever. This makes you very, very vulnerable because your stop loss, if it's very obvious that people are shorting from here, the stops are very obvious too, just above the 61.8, just above these highs, right? On the next 4 hour candle, I saw, a tweezer bottom form there, and I simply closed out that trade. I think, I closed out for around £13, something like that, just enough to cover my commissions on the trade. I then began looking for my next area of entry. Now, my next area of entry is going to be where I expect people to be getting stopped out, which is in around that 61.8 above these highs, right? Above the highs of these two wicks. Therefore, the next candle pushed up. I dropped down onto a 15-minute chart, and I'll put up a screenshot that I put in our group. And I was looking for a 15-minute bearish engulfing in around this level, which I then saw here. I then entered again, with a 90 pip take profit, just to take us down to the origin of this impulsive move. Take you onto a 1 hour chart, you can see that now. However, I was conscious of structure in here around that 50%, right? I was conscious of that structure. So as price began to trade along and we hit sort of 3 p.m, 4 p.m, and I was getting ready to head home, I closed out for just around 50 pips. And that's the trade that you would have seen earlier in the video. Now, I didn't particularly want to hold that trade into the Asia session. I wanted to head home from the day, I had a lot of stuff to do. So now here is how we're going to approach this moving forward. We're simply going to mark out this recent significant low in there, and we're also going to put in a counter trend line here as well, like that. And we're simply going to wait for price to break not only the recent significant low, but the EMA and also this counter trend line. We're looking for price to come back up and retest and drop to the downside, so we can get back trading within the structure of this descending trend line. If I just fast forward you to where price is currently, you can see we're just floating in this region above it, right? There is a potential for upside on this, right? The potential price is going to move off, which is why we're simply not entering unless we can get below structure, EMA, counter trend line, retest. We'll take a fib from that high to that low, and then we'll just simply short it down. That's a very simple, very quick breakdown of that trade, my thinking on it, where that sort of intuition came from, and then how I acted upon that. So tomorrow is the 30th of April, which is going to be a very significant day for me and a very significant day for KB trading as well, because it's our last day in this office space. On May 1st, we move into our brand new sort of 6-person office. I'm really looking forward to it, but at the same time, a little bit of me is going to miss this space, right? This is where me and Callum took KB trading to the next level and actually, got our first physical premises rather than just working from a home office. So to commemorate it, I grabbed a little Polaroid camera, and as you can see, I grabbed a little snapshot of my setup, something that I can physically have rather than a digital image that I can stick up on the wall and remember, look back on, maybe down the line, if I'm having a bad day or I'm feeling a bit demotivated, I can always remember, where KB trading actually started. So I'm going to wrap up now for the day. Nothing's really brewing in the markets. They're still looking at that cable. We're still looking at pound yen, and we're also still looking at euro dollar. But we're waiting for a significant shift in structure that's just not going to happen in the next hour or couple of hours. So it's a good time to sort of wrap up and head home. It is only sort of 5:30, so it's a little bit of an early one for me tonight. But once I get all the work done, journaling, keeping in touch with clients and stuff, there's very little point in me actually hanging around. So I'm going to head off now. Thanks as always for watching. If you are enjoying this, if you do genuinely enjoy these day in the lives, consider hitting the subscribe button. If I've provided you value in this video and you feel like you might have learned something, feel free to like the video as well and share it with somebody who it might help. And maybe if you want to become part of the KB trading community and you resonate with me, you like the way we kind of are and the way we approach the markets, our mindset, then feel free to check the link down in the description. You'll see a link to our website. You can see all of our membership plans, whether you need, just want to become part of the community and chat with like-minded traders, or maybe you actually want to become part of an analysis group and see our analysis and market breakdowns on a daily basis. So we've got pretty much something for everyone. Be sure to check that out if it does interest you. But do take care, and thanks always for watching, guys. Cheers.